I don't want to make this too long, but I want to explain to you the importance of high time frames and lower time frames. So right now, if you're a smart money trader and doing market structure, we are obviously in a uptrend here because we have multiple highs and multiple lows. And the minimum highs and lows you want to have is 4 higher highs and higher lows if you're looking for bullish structure. And the same thing when you're looking for bearish structure. Now, the importance of higher time frames is this. You could be doing market structure on the 1 hour, but the problem is that, yes, this is okay, but if we go to the daily chart, check this out. Okay, so it looked like it was ascending from the daily chart, right? So check this out. Look, overall, we are still in the downtrend, right? So this is why it's important to look up market, to use and utilize all the time frames. And another thing is, there was a fair value gap or a zone here that I had, and then it came down here and broke. For me, I like to see 2 pieces of structure broke. So we had a break of structure right here, and I'll zoom in so you guys can all see what I'm talking about. We had a break of structure there on that orange line, and we had another break of structure right there. So that's 2 breaks of structures. And then those structures broken formed a new range. So the new range would be this. And if I'm looking to sell here because of that higher time frame structure, I'm going to look to sell at the top of the range. So if I take go on TradingView, and there's a tool called the Ganbox tool. I only use this to divide my ranges in half so I can see whether to buy or sell. So I'm looking to sell because we're in sell structure. So on this range, if I take my tool and drag it from the bottom, the bottom of the wick, all the way and drag it to the top of that up here. Sorry guys, hold on. If I drag it to the top of here, you will see that price is at what's called the premium area, okay, in discount. The premium price is simply the higher price when you're selling. It's the top of the range, and discount price is at the bottom of the range. So if you're buying something, you would want to buy it at a discount. Like when you're buying assets, stocks, you want to buy at discount prices rather than premium prices, because premium prices are when the price is high. Discount is when the price is low. Right now, the price is high because it's at the top of the range, okay? And so that's telling me we're at a premium price. So if I go to, let's say, the 4 hour real quick, let me just zoom out here. If I go to the 4 hour, I notice that there is a gap above here. Doesn't necessarily mean it's going to reverse from here, but there is a gap right here on the high part of the range, which is the premium side of the range. And below that, I noticed that there is some potential liquidity that we can have the market come back and get right here. Okay, there's some liquidity right there on that red line. So what may happen is price may come, break this liquidity, tap into this order block there that you see, that fair value gap, or you can call it your supply zone, before going down. And what I'm going to do is, I'm not saying this will happen, I'm just simply making observations. And it already kind of looks like we broke above liquidity. So judging from there, we might still be able to go on a lower time frame, like on the 1 hour, and still look for buy trades. So we have our higher time frame fair value gap up here. Now let's go to the 1 hour. And yes, we are aware on the daily chart that the bullish structure is, we are aware on the daily time frame that we are in bearish structure overall. In the short term, on the 1 hour, we are on bullish structure. So what I'm going to do, guys, is I'm going to take this and we are going to mark structure together. So when I mark my structure, I typically do it from my high, from right to left. You don't look all the way back here and then start structure, because most people look all the way back here and then start structure. We need to look at where we're currently at, which is over here. So we have a low here, then we have a high here, then we have a low here, then we have a previous high. Okay, so we had 2 highs, 2 lows. This confirms my market structure. So for me, I'm going to see, judging by how we broke liquidity on that red line on the higher time frame, we may keep going up. So what I'm going to do is, now that I identified my structure, let's zoom in on the current price range that we're in. And what I mean by current price range is the range in between our market structure. So we have a high here, That is our current high, and this is our current low, right? So what we're going to do is now that we know we're buying, we're going to look for discount levels, like I explained to you guys, discount areas to buy. And that would be on the lower part of the range, because buying low, it's obvious, So if we zoom in on the even lower time frame, like the 5-minute, you know what I notice? I notice that we even have some mini structure. And by that, I mean, check this out, guys. Check this out. All right, so like I said, again, we're going to zoom all. That's a key, too. So when you're doing a structure, don't zoom in like this. Zoom all the way out until you can't anymore on TradingView. That is a tip that's helped me a lot, okay? So we are going to take our current low here. Here's our current low, and we're going to mark our structure from right to left. So our low here, we have a high here, we have another high here, we have a low here, and we're marking everything, every single piece, okay? All right, and this is the wick. Technically, it's not the body, but that's what I usually do the wicks, because on some time frames, the wicks are also the bodies. All right, so we have 4 pieces of structure that confirms we're in the uptrend. Okay, so we may not have a structure up here because, as you can see, this piece of structure is lower than this previous one. Okay, so what we're going to do is notice how before that we still had a low, we had a high, we had a low, we had a high. We are overall ultimately still in up structure. Okay, just because we have one high hasn't broken doesn't mean we're in downtrend yet, because we still have structure on the 1 hour that tells us that we're going up. Okay, so now what am I going to do? I'm going to look at areas that I can potentially buy at. So down here, it looks like price came in and tapped into some areas down here, it looks like. So if I go back here, let's observe some more. Let's keep observing. Okay, now what I do is to find my fair value gaps, I'll typically try to go on the 30-minute chart. And ultimately, you want to use all time frames, but I'm using the 30-minute. Okay, so here's what I've just noticed, guys. If you're familiar with order block, it's just simply smart money injecting money into the market. And by order block, I mean these little areas that I'm pointing the yellow arrows at that you can see on my screen. Those yellow arrows, those are order blocks, okay? Because smart money ejected money into these areas, and the result was it breaking price. And this is a little bit of a better example. This order block happened at the bottom of the range, and when you see this, these are footprints of smart money. Okay, so this is demand right here. This will be your demand zone. So order blocks typically get filled 50%. And so what I mean by 50%, I mean by they'll get filled 50% of the smaller candle, like that. All right, and then I already have this set up, so 50% order block. Okay, now we have a break of structure here. So let's write the break of structure. And as you can see, the cause of this order block on the yellow, this caused a break of structure. Okay, this was smart money. And my confirmation for order blocks are 2 large candles like we see here, 2 large candles right here, and unhealthy price action right here. All these white candles that broke that structure. Okay, and then retailers can't do that, only smart money can, because there's unhealthy price action, and that's caused by volatility. So meaning in Forex market, news, interest rates, things like that, monetary policy, but we're not going to get into that. So now that I've identified my potential area that I'm looking to trade, what I'm going to do is, what you can do is set an alert on this black line. So if I want to enter a trade right here, I would set an alert here. That way, when it enters, or you can even set an alert before it enters, so you can get a line and put the line right here and set an alert there before it even enters, so you know to enter. And the reason we set alerts is because if we're not on the chart, we won't miss our trades, okay? So that was just a quick tutorial for you guys, and just a little bit of tips that's helped me. So the first step is, and I say this in my videos, and I have to keep repeating it because this is how people learn. You have to keep doing it over and over and over again. So the first thing is, be good at identifying market structure. And now we'll talk about fundamentals in another video, but today we're talking about the technical analysis. Identify your market structure on the 15 minutes, 30 minutes, 1 hour. Then 2, after you identify your market structure, look for POIs. And now what I mean by POIs is it stands for point of interest, points of interest. So points of interest, okay? And your points of interest are areas that you're looking to trade, areas that you're interested in trading, like supply and demand zones, fair value gaps, order blocks, things like that, okay? So step 2, look for POIs, points of interest. So once you do that, this will be my point of interest. So remember how I lined that order block there and how I put the gray box there? That's the area that I'm interested in taking a trade of because of my bias, okay? My trading bias. And so once you look for your points of interest, identify, set an alert. Set an alert. And what I mean by set an alert is what I just explained. Set an alert and get your black line here and put it before your actual point of interest and set an alert on TradingView so you can be reminded to take the trade. Okay, so that's step number 3. Sorry guys, hold on. So that's step number 3. And step number 4 is set an alert. Set an alert. Okay, so we did that. Now step number 4 is wait. I'm not even gonna write step number 4. Just set an alert and wait for it to come to your area. And then step number 4 is this. Once price comes to your area, once price comes to your entry / POI, like we just explained, you are going to once price comes, you are going to identify your risk to reward. Identify risk to reward, your R&R. So you'll take your little tool here, like you know what this is, your trading tool here. So say this was my entry, right? And then you're gonna modify your risk to reward. So for me, I'll put the stop loss right here because I'm trading an exact strategy. I'm trading smart money because I don't need to have a big ass stop loss because the whole point is to trade with the banks and institutions. The smart money in Forex are the banks and institutions, and the banks and institutions we have very little drawdown. We have minimal drawdown when we're trading. So the banks literally like to tap. They tap and go. They don't hang out in your stop loss. They'll just tap your entry and go. So this is our entry. My stop loss would be the low of this order block, and then my take profit would be the liquidity that I can identify. So for me, for my take profits, I always take profit in liquidity. So I always look for liquidity areas. So by liquidity, I mean trend lines and I mean support and resistance because the most retailers trade support and resistance. So my take profit can be like a liquidity area, and once you identify your liquidity area, that will be your take profit. So like I said, double bottoms, double tops are your take profit. I'm going to add that. So let's see. Sorry guys, I know it's messy. Identify the risk to reward, and step number 6, identify liquidity. And I'll put double bottoms or double tops. Double bottoms or double tops. And so, and trend lines. And trend lines. So these are your steps that I'm going to give you just to start out to help improve your trading. So identify market structure on the 15-minute, 30-minute, and 1 hour. Then, step number 2, look for your POIs, your points of interest that you're interested in trading in. Okay, and those areas can be order blocks, they can be fair value gaps, they can be supply and demand zones, or however you choose in your strategy. But for me, for the way I trade order blocks, fair value gaps and balance, and Wyckoff schematics. But that's too complicated for a video like this. So we're going to focus on order blocks and fair value gaps. So then step number 3, set an alert before it reaches your entry, so you know when price is approaching your entry. And step number 5 is once price comes to your entry / POI, identify your risk to reward and make sure that's correct. Step number 6, identify liquidity, which is your double bottoms or double tops and trend lines for take profit. And I'll write that down. So trend lines for take profit, and double bottoms and double tops for take profit. So screenshot this, I hope this video helped. This is just like a little mini course. It's not, I know you still have some questions and it's not that in depth, but I just wanted to like make something simple because I know it's hard for you guys to understand how to trade and do stuff when there's a bunch of stuff on the screen and when people are too confusing. But I like to keep things very simple, and yes, because that's just the way I learned. So I've been trading since 2018. I only became like successful like last year because that's when I learned about, you know, the smart money concepts. I didn't even know that existed, but because I had that prior knowledge of Forex, it was easier to learn it. So yeah, guys, if you're wondering if I have an Instagram, it's dynasty_wolves. It's at the bottom of, it's in the comments or in the description. And I don't have a course because I don't like courses because you can't really ask for help after. They're still good. I'm not saying they're bad, but personally, I have like I said, I have a Discord with a community of like-minded traders and resources like ebooks and things like that. And I also have a chart gallery that shows you the trades I take on a daily basis so you can actually see what I'm doing and compare your screen to mine so you can find consistent setups, because to be profitable, you need to have a skill to find consistent setups, whatever strategy that may be. Okay, and that's what we do in the Black Wolf Dynasty. So, I have my full strategy in video format in the group, but I just don't have it like where it's like a course and you can't ask me questions and just like you have to watch it. So there's videos in there that show my actual full in-depth strategy, and there's community. And if you're interested in that, let me know. I'm not charging you no $100, no fucking. Sorry, I'm not charging you $100, $1,000. You don't even have to pay $70. It's literally $49.99, and it's not monthly. It's not monthly. If you were thinking that, it's a one-time payment. And if you have an issue with that, then maybe you shouldn't be trading because you're gonna have to put money into your trading balance to trade. So that's another reason why I make the group so cheap. Because if I charge you guys like, let's say $1,000 to learn this, how are you gonna? I mean, I know you still can, but how are you gonna put like that money could have went in your trading account? So I would rather charge you guys a cheap price, right, and still be able to have some money that you can easily get. And I also think about that how much money the average person has. Okay. And I know other people would disagree with me, but that's fine. That's just how I am. If you guys are interested in connecting with me too, I'm always doing this. I'm really passionate about it. You can ask me questions. I'm on Instagram. It's in the comments and the description. But yeah, guys, I hope this video helped, and peace.